and welcome to our special show, The Home Loan Nightmare. Over the last couple of years, home loans had become a boon for the middle class, allowing people to buy their dream homes quite easily. But today it's the same home loan that's become a nightmare, because most banks have hiked their rates. As a result, borrowers are at the receiving end, with most of their monthly installments or EMIs inflating almost overnight. Over the next half an hour, we're going to address all the doubts and concerns of existing home loan borrowers as well as new home loan seekers. Let me start by introducing our special guests on the show today. We have with us Renu Karnad. She's the Joint Managing Director of HDFC, and of course HDFC is India's largest housing finance company, and it's already financed over 30 lakh homes. Also joining us is Rajiv Talwar. He's the Group Executive Director of India's largest real estate firm, DLF. Also from the real estate industry, we've got Vipin Agarwal. He's the Executive Director of Omax Limited. Joining us also from Mumbai is Harshvardhan Rungta. He is the CEO of apnaloan.com. Apnaloan.com is also into financing home loans, and Mr. Rungta has also co-authored a book called The Complete Home Loan Guide. But before we move on and really ask pertinent questions to our guests, let's start by seeing how bad the situation really is as far as home loans are concerned. Supposing you took a home of about 20 lakh rupees for a tenure of 20 years in the year 2005, your likely interest rate would have been about 7.5%, and that would have worked out to an EMI of a little over 16,000. Now in 2008, for the same loan amount of 20 lakh rupees and a tenure of 20 years, the interest rate is likely to be around 12.5%, and that will work out to a monthly outflow of about 22,700 rupees. That's a monthly increase of about 6,600 rupees, or nearly 40%. Let's try to look at this a little differently. With every percentage increase in home loan rates, for a loan of about 20 lakh rupees, your EMI would go up by about 1,300 to 1,500 rupees. For every percentage increase, in case you've taken a loan of about 30 lakh rupees, you'll have to shell out an additional 2,000 to about 2,200 rupees. And for a loan of about 40 lakh rupees, the EMI hit that you would take every month with a percentage increase in your interest rate would be up to 3,000 rupees. Clearly, ma'am, not a happy situation at all. In fact, we do understand that it's inflation, the I word. Central bank has increased rates. As a result, housing finance companies and banks are being forced to increase rates. But the general perception out there is initially banks lured people with low rates, and now they're just fleecing them by asking for higher rates. Is that correct?
Nobody lured anyone. Let me just get that straight, because when rates of interest were 7.5% and 8.5%, or whatever you've talked about, that was what the market was all about. Auto loans were at similar rates. Personal loans were at maybe trifle higher. It was what the market was. At the time where the example you've quoted, somebody took a loan, at that time he had an option of taking a fixed rate loan. There wasn't a gun put to his head to take a variable rate loan. He has to understand the implications, and when you take a variable rate loan, you also go with the up and the down.
Right. But for most people, what we've seen is almost near doubling of the interest rates, and that's something nobody had clearly expected.
You go for a fixed rate loan, which was maybe at any given time is a percentage or a percentage and a quarter higher, you're safe. When you are taking when you take a variable rate loan, you take the ups and the downs. Coming back to your other question, did anyone know oil is going to be $144 a barrel? So what I'm trying to get at is that it's not correct for media, for people, to think that it is something to do with either the banks or the housing finance agencies who are doing this to them.
We'll come back to the entire comparison of fixed versus floating. Sir, we've come to you first. You're India's largest real estate company. Obviously, high interest rates are proving to be a party pooper for your industry.
Yes, interest rates will definitely make a difference.
Are you already seeing it happen? Is there a slowdown in the industry because of high interest rates?
I think actual users will always buy homes. I think what Renu is trying to get at, and what all of us will try and get, and maybe that's what the intention of the government also is, that basically everyone should have a home. And if you are an actual user, maybe multiple number of homes.
I'll just come to Mr. Agarwal here. Most people are saying that where are the homes for the average middle class person? Property rates have gone through the roof. Interest rates are high. Can people really afford to buy homes at this point in time?
that is the situation as it is. The land rates have gone up. Each cost associated with buying a home loan has gone up, and other costs in the system also. But people plan according to their pocket, and even developers are now adjusting to this new reality and are bringing more affordability into the whole transaction. Like maybe affording a 1,000 square feet house is not easy this time. Maybe 800 square feet house is easy. If your pockets are now pinching, you might cut down to a little more lesser size and still afford a home. So that's possible.
But clearly pockets are pinching more than what people can take. There are people cracking up under pressure because of the rise that we've seen. We'll just like to bring in Mr. Harshvardhan Roongta at this point in time, who's joining us from Mumbai. Mr. Roongta, you've got many clients across banks who are seeking loans right now. Is it really a nightmare that people are facing? They're obviously coming back to you and saying that they cannot afford it anymore.
Well, I would hesitate to classify it as a nightmare. I don't think the situation has reached that angle, that stage as yet. But yes, it's clearly people are worried. And the good point is that most people have taken loans to purchase and stay in the houses. So that's the good point. But the issue is very few of them have planned for the fact that the interest rates may go up. And so they used up their entire leeway to increase their budgets and buy a house, as a result of which they're feeling the pinch. The good point is, because property prices have gone up, they psychologically still feel good, although monthly they clearly have an issue in terms of meeting the increased outgo.